Michael Reinking, Senior Market Strategist here at the New York Stock Exchange. Michael, welcome. It's Friday. Happy It's Friday. Let's get your thoughts, big picture on this week in markets.
Diane, well, thanks for having me on. It's our first opportunity to speak on air.
Yeah.
Look, I mean, this week in markets, I mean, we're coming off of a very strong month of February, right? And that comes on the heels of a four consecutive month move higher in equity markets. Right, coming into this week, the S&P 500 was up 15 of the last 17 weeks. That hasn't happened since 1989. If we actually close higher this week and hold today's gains, that'll be 16 of the last 18 weeks. That hasn't happened in over 50 years. Right, and so this rally continues to expand, and I think that's been one of the most notable things that we've seen this week is the expansion of breadth. We're starting to see the equal weight version of the S&P 500 start to really perform. And with today's rally, the Russell 2000 is actually testing levels, the highs that we've seen going back to kind of 2022, and we haven't been able to clear. And the fact that it's doing that today, as the regional banks, which kind of financials make up about 17% of that index, as the regional banks are actually lower and that index is up about 1% is pretty impressive.
It is, and especially when you think about where we were a year ago with all the concerns about the regional banks and the problems in that effort, and would there be kind of this contagion to the larger financial sector? We're a far cry from that. Yes, the regional banks continue to have some problems, but I want to talk about kind of a macro theme. I'd always heard this phrase, the trend is your friend. Is that one of the things that's kind of playing out right now?
Yeah, I mean, it's really hard when you get into kind of a market like this, right, where you start to see the momentum, right? And so talking back, going back to that point I made about 15 to 17 weeks and 16 of 18, I'd seen a Deutsche Bank study that looked at that, and a lot of times you would, sort of think that you would get this mean reversion and you get a big pullback following that. Actually, if you look at the 3 and 6 month time frame, return profiles over the 3 and 6 month time frame, right? Markets do tend to be a little bit higher, right? So the fact that we're seeing kind of this expansion of breadth, I think, kind of reiterates that. The S&P 500 equal weight is now within 2% of its all-time high, right? So if we can start to break above that, I think that's some really positive action.
And then, so let's talk about, so a lot of the catalyst had been the Magnificent Seven, and we started to see some more widening. As you mentioned, you're seeing the Russell 2000 have more activity this week. What's it going to take to get even more breadth?
Right, so I think it comes down to kind of monetary policy is going to be a big piece of that. And what has kind of turned markets, it looked like we were going to have kind of a slow and sleepy morning. We got some economic data this morning that came in a little bit below expectations. Right. Construction spending, the ISM manufacturing number was also a little bit light. Right, and we've seen a pretty sharp move lower in yields, right? So you're looking at kind of 2-year yields down about 10 basis points, 5-year yield, 10-year yields down 5-6 basis points, and you've now basically reversed the entire move higher that we had post CPI in January, right? So you're now kind of backing and filling, and I think as we kind of the Federal Reserve potentially moves closer to their first rate cuts, and you start to see that the financial conditions easing, that's when you'll start to see some of these smaller cap companies, which have much more interest rate sensitivity. If you think about those mega caps, they're throwing off so much cash flow. They don't really rely on debt markets. There's a lot of variable rate debt that sits on balance sheets at small cap companies. So as you start to see financial conditions easing, right, these companies can start to perform better.
Is the market pricing the number of expected rate cuts right now?
So I think, obviously over the last, since the end of the year, right, markets have completely recalibrated, right? Yeah. So we went from, pricing in 6 by the end of the year, which I never quite understood because if you had 6,
exactly?
Right, like if you have 6 rate cuts, that's a really bad thing. Like something would have had to have gone pretty horribly wrong, in my opinion, to get to there, right? At this point, they're very much in line with where the Fed has been guiding us, right? So, I do think we're like in a good spot. There was some concern coming out of the January data that we had seen, stronger economic data and hotter inflation data. Yeah. That January data does tend to be very volatile, right? So I think we can see some of that unwind in the coming months. The one thing though that just looking at what's happening today that is a little bit concerning, right, is that you're starting to see some of these commodity markets. You mentioned gold, but oil prices especially. And if you look at kind of RBOB gasoline prices, that's up over 20% off of the lows since the start of the year, right? So that does impact the consumer wallet, right? So that's something to kind of pay attention to in terms of kind of an inflationary impulse in the market.
Right. It's especially like you said with regard to crude, and then that trickle down effect to the prices at the pump. Really quickly before we lose you today, let's talk about the week ahead. We've got not a huge economic calendar, but there are some key pieces of the puzzle to pay attention to. Job market's going to be a major focus next week. We've got the private sector with ADP first. Then by the end of the week, we got the granddaddy jobs report, monthly payrolls, and a couple other things we're expected to hear from Fed Chair Jerome Powell next week. What are you watching in the week ahead, or what should we be paying attention to?
Yeah. So on Monday. So from a macro perspective, right, there's a leadership meeting in China, right? So that's going to be one of the first things to pay attention to. That's where they're going to set their GDP targets and their fiscal deficit targets, right? So from a more global perspective, right, we're going to be getting some commentary out of China early in the week, which I think is important. Tuesday we have ISM services, right? So we're going to want to see after today's manufacturing number, we're going to want to see how the services survey comes out. Right? And then as you pointed out, we have all this employment data, which is going to be really key. Markets are looking to see deceleration from the hiring that we saw in January, somewhere a little under 200,000 jobs, which is still a pretty healthy hiring number. And then on Wednesday and Thursday, we're going to have Fed Chair Powell kind of testifying before Congress, right? And I think markets are very much aligned with where the Fed is at this point. But we could start to see him talk a little bit more about QT. We did have some comments from Fed Waller just before we came on air, right, suggesting that QT could actually run a little bit longer than people had been thinking. And interestingly enough, you still have rates moving lower this morning.
Wow, interesting. Great stuff. Michael Reinking, thank you so much for joining us. Michael Reinking right there, Senior Market Strategist of the New York Stock Exchange.